Great. Continuation of the question solving. The continuation of the question solving. So if we should continue from here, go to provide a short trial balance. Short trial balance. No, they paid 50,000. So if I should group this, let's have debits, let's have credit here. Let's summarize this transaction. There's an asset, right of use. So we should call it what? Right of use, which is debit, right? 242, 300. Okay. Let's do something. Now, what is the present value of the lease liability? Now, right after the payment, the first payment, the lease liability will be happen to be 177,300. Then what about the cash, the amount paid? Exactly. So the amount paid, probably let's call it cash. It happened to be, open a bracket, you paid 50,000, you paid another direct cost of 20,000, but they gave you an incentive for 5,000. At the end of the day, you paid 65,000. If you balance this, it must balance. If you balance this, it must what? Balance. It must balance. However, our lease obligation still remain at this amount. Our lease obligation still remains at this amount. Okay. But basically, that is that. Now, alternatively to this section, but this section is not part of the solution, it's not part of the game. It's just to illustrate how the trial balance looks like. Alternatively, the present value of the liability, if of all the liability happen to be that of the 227,300, then we now try to examine the amount paid, the direct cost less the incentive, 20,000 less 15,000 less 5,000, and this will give us what? 15,000. When I balance this, I balance nicely 242,300 and 242,300. Perfect. This is not part of the solution. Okay. Now that we are done a determination of the right of use, let's go to our P&L, go and calculate depreciation. First and depreciation, let's go and calculate the depreciation. Let's go and calculate depreciation. Please, if you have not gone through the first section of the question solving, kindly do that. Good. So first, depreciation. So the depreciation calculation will be 242,300 divided by what? Divided by 5 years, right? Got the shorter. And then is it not the useful life of the assets? Now, in accordance with the IFRS system, the asset should be depreciated over the sum of the asset useful life and the lease term. So compare the two and select the shorter. That's all. So the lease term is 5 years. The asset useful life is what? 10 years. So we're going for 5 years. The shorter one. Yes. 5 years. So this will give us a depreciation value of 48,460. They include in the first year. And proceed. So every year 48,460, and find the current amount of the asset and put it in the financial position. So the pro forma that I provided, go to the financial position and key in right of use and calculate the current amount for each year. That is all. So let's go to the hard bit. How to find the three items, the three stubborn ones. Let me write their names here. The three stubborn ones. The finance cost, the non-current liability, and what? The current liability. Okay. So we're going to provide workings and look for those figures. Good. Let's see something here. Now the workings number 2. Workings number 2. We call it movement in liability. Movement in liability. Let's look at that one. Movement in liability. Movement in what? Liability. Now we'll start with the year. We'll go to the open balance. That's the liability at the start of the year. Then we go to that of the rental payment or annual payment or lease payment. Then we go to balance or net balance after the payment. Then we go to interest. Then we go to the closing balance. That is how it will look like. That is how it will look like. Good. In fact, we need to scan through a lot of questions because of this. Because of this present value calculation, you need to scan through a lot of questions to know how to determine what the present value of a lot of questions. We should do that. Scan through a lot of questions to determine the present value. Okay. So that is that. Now, originally, this question did not ask us to do for all the years, but I will do for all the 5-year period. So, year 1, year 2, year 3, and year 4 up to year 5. Take notes of that. Now, in any case, if they need for just 1 year, they ask for just 1 year, you need 2 years. So take note. If you need only 1 year because of the non-current liability. So let's start. What is the total liability? Now, what will be the total liability? Good. Total liability will be 227,300, which is made up of the 50,000 plus the 177.3, or the one that we use a single formula to produce it. So that here to be something like 227,300. That becomes the total liability right at the start of the period. And immediately, if I paid the lease in advance, so record 50,000 here throughout. Record 50,000 here throughout. It will be 50,000. record 50,000 throughout. So record 50,000 throughout. 50,000. Okay, let's see. So first, the lease payment is 50,000. When you take off the net balance, now level 177,300. That becomes the liability immediately after the first payment, 177,300. Then you find 5% of this value. Good. Great. So the answer will be 8865. That should be the interest. This one will give you 186. Now let's explain something here. Why we are using 2273 but not the 242,300? The reason is this. The composition of these 24300 they are, let's see, initial payment, which was 50,000, plus the present value 177,300, again plus the direct cost of 20,000 less lease incentive for 5,000. Now these two items are not liability, they are not obligation. Direct cost of 20,000, meaning bringing the assets, or before they can access the facility or the building, before they can, how do you call it, use the assets, they need to incur some installation cost. That one is not part of the lease. It's not a lease obligation. It's not going to pay this money to who? The lessor. These monies are direct costs, some works that you need to perform on this asset to see this preference. I want the asset to be like this. I want the shape to be like this. So can I modify a little or go ahead and modify it? Those modification costs are not part of the lease obligation. Don't pay to the lessor, the owner. So these costs are not part. So the actual liability you owe the initial amount plus the present value of the remaining ones. So this becomes the total liability right at the start of the year, before he paid the 50,000. So this is the 50 that he paid. So right after paying the 50,000, now left it was 177,300. So that becomes the liability for the 4 period, because this going for 4, the first year he had already paid it. That is the source of 227,300. How we get it? Because the installation, the building, somebody's building you're going to occupy for the first time, no matter what, you need to do some little repairs. You want normally your front desk look like this. You have to fix certain things in there. All those ones are what? The direct cost. They are not part of what? The lease obligation. You're not paying this money to the owner of the building, not at all. It's the cost that you need to incur before you can probably use the assets. And then the incentives should not form part of the liability. Good. So that is right. Then we continue the game. We add this and then we push it in here, and then we move on with it. So this will give us 186,165. That'll be the amount. Don't forget that we're reporting in dollars. It should be on top of all of them. So take note of this. If there was a break in the recording, so we have not gone to the first section, the initial part of this question. Can you go to the initial part of this question? Okay, so let's push it there. 186, 165. Then let's take off the 50,000. You get 136,165. They charge you interest on it 6808. You add it back and then you get a closing balance. Good. So let's add it back and then you get a closing balance of 142,973. So 142,973. You take the 50,000 out. You take the 50,000 out, you get 92,973. You find a 5% on it. Yeah, we do something. So we get 4649. Again, you add it back to this, and then you get a closing balance, and the closing balance will be 97,622 Ghana cedis. And that becomes the open balance for the last 1 year, 97,622. We take off 50,000, the balance will be 47,622. Perfect. Then, now, over here, don't worry yourself and calculate the interest. Tell the examiner that in advance, the closing balance for the last about 1 year should be the same as the rental payment. To make it 50, put the 52 here. The balance becomes dash. Now over here, just find the difference between 50,000 and this net balance. That's the interest charge. If you take 5% of this, you might not get that answer. There will be some little add-ups or minus due to approximations. But if you go by this approach, you are sorted out fully. So you get 273,2378. Perfect. At the end of the day, if you add this and this, you might get a 50,000. Now take a calculator and find 5% of this, whether you get this figure. Let's see if you get it. Let's calculate it and see. So if you calculate, you get 2381, which will give you some differences. Some differences, about 6 or 8 differences, which might distort your answer. But under exam condition, it's perfectly true, because like 2 or 3, 5 differences is not all that significant. But at the end of the day, you come dash, dash, dash. So that is how it should be. That's how the table should be. Now, all the interest payments should be reflected on the finance cost. So go to the P&L. Just immediately after your depreciation, write finance cost there. Under year 1, year 2, year 3, these are the figures. So year 1, put 8,865. Year 2 is this. Year 3, year 4. Unfortunately, for year 5, you don't owe the person because you pay everything right at the start of year 5. So you're not owing the person, so there's no interest charges. That is all. So year 5, no interest charges. Good. Now let's go and look at the hard bits. I'll start from year 1. So you're going to look for the, tell me the non-current liability. Under non-current liability, there must be lease what? obligation. And a current liability, there must also be a lease obligation. Can you follow the rule? I'll do year 1 for you, and you do year 2. Then I'll do year 3, then you do year 4. Year 5, don't worry yourself, everything is 0, 0, 0. Because I know that final year, you don't owe anybody. Let's do the year 1. To get a non-current liability, just start at year 1, go to the next year, the balance left after the last repayment. The balance left after the last repayment. Good. What I'm done, I'll give you a shortcut. Now I'm here, the next day is year 2. This is the opening balance. They paid 50. This is the balance. So this becomes the non-current liability. That's the balance left after the last repayment. We don't say that is the closing balance. Though. No, it's not the closing balance. It is the balance left after the last repayment. So at the end of the day, you get 136,165. That is the non-current liability for this table. Now let's proceed. This closing balance is the total liability for the first year, which we have to divide it into 2, current and non-current. If this is the non-current, what will be the current portion? Out of this figure, if this is non-current, what is the current? Don't you worry yourself. Tell the examiner that the answer is 50,000. That's all. The difference between this and this is 50,000, and that's a shortcut. The shortcut is that anytime I'm solving question, the lease question, and the payments are in what? Advance. If the payments are in advance, tell the examiner that always the lease obligation becomes what? Becomes the rental payment becomes the current liability. Good. So I can easily be writing them plenty. Let's go to year 2. This is the total liability at the end of year 2. Kindly split it for me between current and non-current. To get a non-current, go to the next year. Balance left after the last repayment. Okay, the balance left is what? It's 292. There will be 92973. So this obligation for the current liability becomes 50,000. Let's go to the third year. If I'm here, the total figure here can be divided into 2, non-current and current. The non-current portion is to go to the next year. I'm here. The balance left after the last repayment, which is what? 47,622. So this becomes 50,000. Let's go to year 4. At the end of year 4, we are here. This is the total what? Liability. Total liability. This is the total liability. Now divide this into 2 for me. So year 4, you are doing it. So tell me the current liability and tell me the non-current liability for the year 4. But I've gone through all the 3 years for you. You are doing the year 4 for me. So what happened is this. The non-current, go to the next year, the balance left after the last repayment is 0. The non-current becomes what? 0. Current is what? 50,000. And then the last year, 0, 0, 0, 0. Okay, we are done. Now I'm challenging you. You are going to solve the same question. Assuming it's what? Yes. I'll take the solution. I'm going to solve the same question and the areas. Assuming everything the same. I'm not going to change anything. Assuming it's areas. Try it and let's see. Great. Now let's look out for our next question. Though I'm still waiting for the arrears version of this particular question. Solve it in arrears for us to see. Okay, let's do for this. Aquaco. It goes like this. Aquaco makes up its account to 35 December each year. It enters into lease bracket as what? Let's see. Okay. To lease an item of equipment with the following terms. Inception of the lease, 1st January 2011 or X1. Term, 5 years, $2,000 paid at the commencement of the lease, followed by 4 payments of $2,000 payable at the start of what? At the start of each subsequent year. So basically almost the same as what you saw. 2,000 start and 4 payment at the start of each year. So meaning that the lease term is for 5 years. But the initial payment, because of the initial payment, you pay the initial 2,000 and the rest 4,000. It might go the same process. That's what we've done. Oh, this is actually very good though. Fair value 8,000. The fair value of the asset is 8,000. Present value of the future lease payment is what? 6,075. Take note, the 6,075, it does not include the initial 2,000. Does not include the initial 2,000. Useful life of the asset is 8 years. And then the interest rate is 12%. Now, the useful life of the asset is 8 years. And then the lease term is 5 years. If you are calculating the depreciation, which of the years are you going to select? Great. So the lease term should be 5 years. Or the useful life. Useful life is 8 years. Lease term is 5 years. The depreciation should be over 5 years because the shorter of the two. Fine. This is logic because even though the asset will last for 8 years, you are going to use it for how many years? 5. Because the lease term is 5. That means the future economic benefits will last for 5 years. So yes, in your hands. So all the lease benefits should be what? Depreciated or amortized over the 5 year. Because you cannot amortize or charge depreciation in a period where the asset is not producing money or producing inflow to you. So that is the okay. So quickly calculate the total present value and let's see. Required. Show how this lease should be accounted for in Aqua statement financial position as at 31st December 2000 X1. The first year, normally they ask for the first year. But I like doing all like the one that we saw. We provided for all the relevant years. Good. So let's see. Let's go to the board. This one too, I'll provide some. This one I'll do only for the first year. I'll not do for all the 5 years. Examiner requested for just first year. The first year. Okay, so let's start quickly. Let me provide summary of the question. So the list started from starting date. So term commencement date, which is 1st of January 2001. The lease term is 5 years. The payment will be you pay $2,000 now, following by 4. If you can tell them that $2,000 advance bracket advance. That is all. Receiving. And then the present value, fair value of the asset is $8,000. They've given you the present value of future payments. Not it does not include the initial one. So they had $6,075. If they should add the initial payment to it to be $8,075. The useful life of the asset useful life 8 years. And then the interest rate is equal to 12%. Start. I'll do for only the first year. I'll not do for say all the 4 years, no, all the 5 years. Okay, so let's start again. First of all, let's calculate the cost of the right of use, right? That's the first thing. Don't forget what to go to P&L, what to go to the financial position. When you start, the pro forma should be in there. Depreciation, finance cost, here the right of use, that is done a right of use. I'm doing for year 1, you can also do for year, you can do for year 1 and 2. Good. Now, right of use, go to the next section, right after the right of use, go to non-current liability, right lease obligation. Right lease obligation. Then you go to current liability, again, lease obligation. These are the items I need. So currently, make sure that you have these items there, I'll clean and then provide how we can get this. Let's start. So first thing, the cost of what? The cost of the right of use. Good. Which comprise of what? Which comprise of the effect. Now what happened is this. First, cost of right of use. First, we say the present value. Yeah, thank God no direct cost, no lease incentive. So go straight forward. So present value of future payment. So we can start with the initial payment. But the present value, I'm reporting in dollars. That is that initial payment happened to be $2,000. And then the present value of what? The lease payment happened to be 6,070. I'm not very good. Now you get 8,070. I'm just assuming that this figure in the question. Let's put this figure by ourselves. Let's go. I wrote a formula at the first section, right? Again. So let's calculate for annuity factor. Annuity factor for how many years? 5 years. Using this discount factor or using this cost of capital. Good. Or if you don't want trouble, just let us know that if I'm looking for present value of 2,000 cities, that is going to pay for how many years? 5 years, and it's in advance. Relax. The shortcut is this. I think we can go by the shortcut. It is same as what? The 2,000 plus PV of what? 4 years. That is all. But the examiner will give you 4 years and 5 years. Don't take the 5 years. The examiner's 5 years, don't take it. It's not true. The examiner's 5 years given to you, don't take it. It's not true. But the 5 years you are going to calculate, not the same as the one the examiner will give it to you. So that is all. This is the 2,000 and this is the 4 years. Okay. Now I'm going to produce one discount factor. That will help us get this 8,075. Let's see something. Third examiner. That is 1. What's the cost of capital? 12%. Okay. So 1.12 minus what? 5, because 5 years. All this divided by 0.12. This times 1.12 because it's in advance. If it's in arrears, don't bring this one. If it's in advance or the arrears, good. If it's in arrears, this section will not be part. Arrears, cut this section off. Advance, bring this section. That's the difference. Because if it's in arrears, if the payments are made in what? Arrears. Don't bring this section. These sections are not part. This section is for advance. It's the same as 1 plus the discount factor. Good. If you want to calculate by yourself, if you want to calculate the present value by yourself, that is how you should do it. Okay, so first online, what do you get for the discount factor for a 5-year period? So in short, we will contain this will be the total liability. This will be the total liability. So, and then we'll calculate the movement in liability. Now, if you use the shortcut approach, you still get the same answer. And then the movement in liability will be calculated as follows. What happens is we start with the opening balance, the year opening balance, lease payments, net balance, interest, and then the closing balance. Let's start. I'll do for just the first 2 years and then move on. The opening balance, that's the total liability. We owe 8,775. The lease payment is 2,000, so can you write 2,000 throughout all? Then what happens is this, we take the 2,000 off. We have what we call future lease liabilities. This is the future, present value of the lease liability. You find 12% on it. Then what do you get? Let's see, so I get 0.12 times 6075. 729. So 729. You add back plus 7075. 6804. So you get 6804. Push it here at 6804. Take 2,000 out. Therefore 804. Now charge less 2,000. Good. Now times multiply times dot 12. You get something like 576. Yes, 576. Add back, so then add back plus 4804. 5380. So you get 5380. You push it here at 5380. You take off 2,000 from it, left with 3380. Okay. I'll probably end here. Now, what's the total liability? I don't see here. 186,804. Split this one into 2 for me, current and non-current, and that is all. So if I want a current, I can only get a non-current part first, which is equal to go to the next year. The balance that after the last repayment is this 4,804. 4,804. Oh, sorry, that side is not coming. Not showing. Let me do it here. So if I want to get a non-current liability, so lease obligation. Here, the next year is this, so 4, year 1 will be 4804. When I go to the current liability, we say the difference between this figure and this. And don't worry yourself, we said that follow the rule. Lease obligation. The current liability should be the lease payment, 2,000. You have to get the same answer. And that is all. We continue this calculation until you are done. Another note, this is how far the good Lord will bring us for today. We'll continue again with the question solving. If we are not done, until we finish everything and then move into the lessor accounting. But before we go, I will project another question for you to look at it for me. And then our next meeting, we'll finish it by still and lease back and talk something small about lessor accounting. And then, so our next section should be sale and lease back and lessor accounting. Even though the sale and lease back transaction is under revision, we'll look at all those steps. Great. Great. Kindly subscribe if you have not done that. And share the link to your friends. Continuing again, we are going to release more of this into advance. We go into the lease, sale and lease back, and lessor accounting with complex and modification of leases. Take note of modification of leases. Kindly subscribe if not done that, and support target to reach the entire world.